in terms of just some of the resources that I want to make available to everybody, for those of you that have not been over there yet, I actually have been uploading a lot of new video over at YouTube. So if you want to check that out, one of the videos that I posted yesterday was this 2-minute drill, and I hope to do more videos like this in particular. Hi, this is because what this is a very quick, very to the point, fairly fast-paced video that explains either a trade entry or trade management of a trade that I've got on. So, and that way you've got insight into why I've gotten into a trade, how I'm managing it, what are the issues that I'm dealing with right now. For example, I don't know how many of you were watching my my Euro US dollar fade. I'd faded the Euro US dollar from 4,500, and while that trade is still safely within, you know, the black, so to speak, you know, I'm not in the red on the trade. It's moved in my favor. My concern was, especially with ADP this morning, how much more would it continue to move in my favor? So these were some of the videos and things that I was doing yesterday, and actually I was setting up some other video channels late last night, so I didn't actually get to bed until very late. I'm sure I'll pay for it today. You know, there are those days where you get a couple ideas and you really want to run with something, and then before you know it, it's become very late, and I had one of those evenings. Alright, so let me show you what's happened since with that Euro US dollar chart. And it was the daily time frame. And this was the fade I was talking about up here. And essentially, we've bottomed out at 43.83, which was fine. I was able to at least realize an initial profit target, go into trade management mode. Okay, and I wanted to talk a little bit about trade management with you today. Okay, and then of course, if you have any questions, I'll be more than happy to answer those about the current market. I should mention that right now, the Dow Jones Industrial Average is up 126 points. That is doing what to the US dollar? It is pushing the US dollar back below 74. Okay? We had a one-day bounce. The reason I was expecting a bounce is we'd come off basically what amounts to the range floor on the daily dollar index. So when the Dow is up, the dollar will be down, and that will in turn keep this trade that I'm looking at, the Euro US dollar daily chart fade, from following through to the downside. Alright, so there's the connective thread. So let me show you my entry and the why of it, and then we'll talk a little bit about the management of this trade. Okay, so 44.95 was the entry. And I'll just go ahead and, well, that one's red, so I'll just keep it red. That was the entry short. It was based upon the 4500 major psychological level and the exhaustion here that I was expecting. Now, prices did go as high as 45.48. Okay? And one of the ways that you can deal with the issue of a very kind of loose or soft top, as we had right here, because take a look, I had this issue here, you know, a high here, so we really didn't have a very horizontal ceiling. So one of the ways that you can deal with this is wait for the momentum to get back on your side, which is, I know 4,500 is a level that I think will be resistance. Basically what I'll do is I'll watch prices move up, and then I'll wait for them to come back down and exhaust. And as they trade back down through 4,500, I can go ahead and get short. And that's what I did here. That's something I also talk about when it comes to swing trading. On those swing trades that are correcting very deeply into the wave, sometimes I'll let prices rally up into the wave, and then on the way back down through my price, in this case because it's a short, I'll go ahead and enter. Okay, so that was the entry there. Because again, why would I consider doing that? The ceiling is just so soft. Now my other alternative, and this was perfectly viable, and probably the better way to go, quite frankly, would have been to look at the past high that was waiting here at 45.34 and short there. And even though we still went up to 45.48, it would have given me another 38 pips on top, well actually close to 43 pips on top of my, on top of what I was able to get. And the heat was not terrible. Okay, I could have basically watched the 45.50 major psychological level. But really the reason I focused in on waiting for prices to go back down through the 00 was the momentum that I felt prices would pick up to the downside having broken the 00. Okay, that's the thinking behind the entry. The confirmation of it would be not just price being reached, but the overbought. That's what a CCI. I need a stochastic here, so let's go ahead and pull that tool up. So I need a stochastic oscillator, and let's go ahead and I like my dark colors. This makes my life easy. I'm looking at multiple charts and multiple screens and everything else. So what we need here is just a stochastic. And if you notice, there's the 80 level. And we were showing actually overbought for some time. Actually, we popped up above 80. See what about there? So we were showing overbought long before my price was reached. Actually, no, we were showing overbought pretty much as soon as we hit 4,500. Okay. The timing on distribution fades can be tough, and it's one of those trades that you've got to have a pretty good feel for what the Dow is doing, what the dollar is doing, what crude's doing, what a lot of other charts are doing in order to confirm where you think the exhaustion and the reversal and the getting sucked back into the range will occur. Okay, it's a difficult entry. That's why it's aggro entry. And if anybody has any questions, just let me know. Okay, so that's the thinking behind it. Again, the momentum back down through. Quite frankly, there was probably 2 or 3 opportunities to do this. Okay, in terms of getting back down through. Now, let me answer this other question because I think it becomes very relevant. If you weren't watching the US dollar, then chances are you could have started to consider an entry back as early as this candle right here, and that was the 26th. Because I was watching the dollar index, and it bottomed out on the 29th. Okay, this was this candle right here. The day that I'm considering fading is very different because the dollar index had not yet bottomed out towards the lows of its range until the 29th. Okay, but if you had gotten in earlier, it's about a 10 to 12 pip stop. So if I'm basically trying to enter at 44.95, if we get above, in this case because of the major psychological level, if we get above about 45.10, I'm out. Okay? So if you did consider this and you're not looking at the dollar index and the Dow and things like that, you might have considered it as early as the 26th. If you're watching the dollar, you probably wouldn't have even considered this until the 29th. Okay? And then you're waiting for prices to come back down through. The cool thing about this is you can enter and exit this trade at a loss a couple times because you're only risking about 10 to 12 pips. Okay, so 44.95 short, 45.10 out. That's about 15 pips right there. My stochastic settings, let's zoom in here. Stochastic settings are quite slow. I like them very slow. 21, as you can see there. So as we now consider the management, all right, so I mentioned that the initial profit target was hit, and that was basically 44.05. Now notice I'm giving these major psychological levels a lot of respect, because the very reason that I respected it as an entry is the same reason I have to respect it as an exit. So this is potential support. And there it is. So recall that 44.95 as the entry. Short sell. There's my one level of support right here, the 44.05. For those of you that wanted a target that was a little closer, you could consider, say, the 44.50 level. You could consider the 44.20 level. Okay, both those psychological levels are absolutely valid. Now here's where we'll talk about the management. Okay, and I'm going to go ahead and make the management line blue, and I'll show you what I've done now. So let's talk about trade management for a moment, because understanding this is very important in terms of why it's vitally part of your trading plan to determine. It's vitally important to make part of your trading plan determining where your initial profit target is going to be. And this isn't just for this trade. I admit this is probably not the greatest example, because it's a very aggressive trade. It's one that probably needed a little bit more finesse and massaging than say a straightforward swing trade or something along those lines. But I wanted to follow up that 2-minute drill from yesterday that I posted on my YouTube channel. So just remember that this applies to any type of trade entry, that the management steps, or at least my philosophy on it, how I do it. You'll notice that I put the blue line just above the red line. The red was my short, right? The blue line represents what I would like to do, maybe not to the price, not in terms of absolute price here. If I got in at 44.95, I want to place my target for my initial risk-based stop, as we mentioned, at 44.15. That was the risk-based stop, right? So as prices went down through, the 44.00 hit my price at 44.95. My stop loss is waiting to protect me just a few pips later. And by the way, at 15 pips, it's a small stop loss, probably the smallest stop loss that of any of my entries. You could get in and out of this one a couple times. Not that it's fun, but it's a manageable risk, considering that I'm looking at about 80 pips the downside. Okay. So then place that stop loss in there, and all distribution fades have a 10 to 12 pip stop loss. I want 15 here because of the 00. It positions me in a good place around the 00. That's the risk-based stop. As I mentioned, though, I hit my first profit target down here at 44.05. In fact, we went even lower to 43.83. Okay, but 44.05 was easily hit. As soon as my initial profit target is hit, and this is why it's so important to not get too piggy. I might have been a little piggy on the 44.05. I might have been better off doing 44.20 or 44.50. But regardless of where you put that initial profit target, when it is hit, you then take the risk-based stop and turn it into a break even. In this case, what I'd like to do, so I had that 44.15. What I want to do then is make it a 44. And I'll probably go with 45.05, and I'll explain why in a moment. Break even. Now, a break even literally would be 44.95. But the double zero changes the dynamic of this entire entry. And you've got to remember this when it comes to double zeros. I could put it at 44.95, and that would be where I got in, and that would be a break even. But if I've got the double zero as a ceiling overhead, wouldn't I love to use it? So yes, my trailed in stop would only be a 5 pip, I'm sorry, a 10 pip trail in. But it's the habit, it's the idea behind it that we're trying to capture here, which is, yes, if prices go back up, I'd like to give the double zero and the likely selling pressure that's waiting there a chance to kick in and keep me from getting stopped out. Again, it's a break even. I'm risking 10 pips at this point. However, I want you to think about something. I don't always have situations where 44.95 to 44.05, that's 90 pips. Okay? That's 90 pips. So here's where I was mentioning it might have been better for me, smarter of me, to put in a 44.50 or a 44.20 exit, because what happens is I've got to reconsider how much I'm willing to give back. I'm not giving 90 plus pips back. In other words, I'm not going to get this winner let this winner turn into a loser. Once I hit the initial profit target, this trade is now defined as a winner. Okay? 100%. It's now defined as a winner. What I then want to do is keep in mind that if this indeed is now a winner, I don't want to let it turn into a loser, which is defined by what? Exiting at negative pips, right? If I let this break even be hit, after hitting the initial profit target way down here, I'm going to give up 90 pips of the remainder of my position? That's just pretty stupid. Okay, so obviously trailing in stops and things of that nature presupposes a couple things. One, that you've actually realized a profit here. You have to realize a profit. That's my feeling. Okay? Because if you're not going to realize a profit down here at 44.05, you must be much more aggressive about trailing your stop. If you have multiple contracts, maybe you're fine with giving up 90 pips. I don't know, because you've already realized one part of your overall position. You've already realized 90 pips of profit on, say, half or a third of it. If you have not, my feeling is you've immediately got to cheat this risk-based stop loss. You immediately got to just cheat it down or chase it down to a level at which, if you are stopped out, it still represents a healthy gain. I don't like trading it that way. I'd rather realize a profit, and then for the remainder of my position, go ahead and move the trailing stop or break even down. So you have 3 types of stops. You have your initial risk-based stop. That's the one that you place when you get in, and it will represent a loss to your account if it is hit. After you hit your initial profit target, and I mentioned here, I was probably a little piggy about it, but I want to be frank with you, not all trades go textbook. When I saw the weakness in the Dow at the open, when I saw the strength of the dollar index, it basically allowed me and emboldened me to be a little piggy because of the momentum I was seeing in the markets that I felt needed to move a certain way to allow me to see the follow through on the Euro US dollar fade here. Have I lost anybody yet? Does anybody have any questions? Type them in and we'll address them. So, because I do have still some position of my position left, I could leave my break even here, but I don't want to give up 90 pips plus. So what I've done, and there's a couple options you have here. One, you can move it to the 80 pip, minor psychological level. That's one thing you can do. Okay? Gives you a little bit more wiggle room, but it also protects you from letting the remainder of your position go at a loss. In fact, it'll be at a slight gain, 15 pips. Okay? The other alternative, which is what I did, and I'm out of the market now, was trail it down to 44.50, which could have easily been one of my initial profit targets. Major psychological level, and it was hit, but fine. Okay, I took 90 pips out here from my 44.95 short on a portion of my position, actually half of it, and the other half I got stopped out, yes, but I got stopped out at a trailing stop, which represented a 45 pip gain. Okay? And now I'm flat. Now, I could have trailed it up to that 80 level, but what made me choose 50 over 80? Let's talk about that a moment. The fact that the pre-market Dow really started to climb at a significant clip. Okay, let me show you that here real quick. So the first thing I want you to notice is this is the YM, which is the futures, mini futures for the Dow. And let me go to a short-term time frame and show you what I was talking about. See how we started to climb? Actually, we started climbing going into the close. And we continued that climb pre-market. So this is all price action that I could see happening late last night when I was up early this morning. And this is not the type of price action that will lend itself to the US dollar weakening. Okay? The dollar is not going to weaken when the Dow is showing that kind of strength. The dollar is not going to strengthen and weaken the euro-US dollar, the pair that I'm waiting to see downside follow-through in if the Dow is strong. So let me say that one more time. The strong pre-market Dow, and actually the strong after-hours Dow from yesterday, followed through into Asia, followed through into the European Open, followed through into the early U.S. hours, and accelerated after the ADP a little bit. Okay? The strong Dow is in turn going to pressure the dollar index lower. That in turn is going to allow the euro-US dollar to do what? Start moving back up higher. So this is why it's so important that you understand the pieces of what's going to make the trade move in the direction that you want it to move in. Okay? Very important. So some of you will ask, okay, Raghee, well, hopefully you understand my management here of the trade, the reason I got in, I really wanted to get into detail as to all that. Okay, it might have been a little dry and I apologize, but I really want to get into the detail of it. So a lot of you might be saying now, well, how do I even see some of these other markets you're talking about? And that's a great question. In terms of the charts I was just using, those were e-signal charts. And quote.com is basically a way, and the reason I use quote.com is if you've looked at my e-signal symbol, you'll be able to pull up those same symbols on quote.com. Okay? So let's see. I know you can get different charts and quotes for, like, for example, if you want to take a look at the Dow. And if anybody's interested in doing it this way, you can just go to quote.com and do it that way. Remember, some of the futures contracts are going to be delayed because unless you're paying for the exchange fee, you're not going to get real time. A lot of traders will use quote.com just because it's easy to look at my e-signal, find the symbol, and head on over there. Quote.com is an e-signal product. The other option, and I'm not as familiar with this site, but a lot of traders tell me it's great, which is finviz.com. In fact, there it is, Finviz. Finviz is, again, a very popular site. I learned about it through my work with StockTwits. And you'll see here the Finviz. It's a huge site. It's got news and screeners and so forth. But I know you can pull up dollar index and the Dow and Nasdaq. You can pull all those up, and actually you can make your own portfolio here, and then you can just run over to Finviz when you are looking for the price. And I'm just pulling up just a single chart here. They're nice looking charts, as you can see here. And you can pull up, I talk about crude oil a lot. It's a crude oil chart. I can go to different time frames, as you can see. So this is another alternative for charts. And I've actually I really like this site, because unless someone's already very comfortable with eSignal or Quote.com, I know it can be difficult sometimes finding what you're looking for. Finviz is an alternative. It has a little bit of everything here. Okay, so Futures tab. Take a look. And this is what I really love about it, this heat map. I trade futures as well, so it makes perfect sense. But you can take a look at this heat map here. I don't know how many of you have been over here before, but it's a terrific tool. And even bonds. You take a look at the bonds here in the lower right corner. For those of you that are interested in metals. Okay. So a lot of great information here. As you notice, US dollars in the bottom left-hand corner. And the way I got here was just go to futures. You can see that cool heat map. Look at gold, look at crude, look at the Dow. And then there's the US dollar. All right. And that is finviz.com. So hopefully that is going to help you a lot with some of these decisions you'll have to make in related markets. Really important, very helpful. I think it will absolutely change your trading for the better. Okay, so check out, and I'll try to put together some videos on Finviz and some of the other tools that I use. So check out my YouTube channel when you have time. You can check out the videos I'm posting. Hopefully they'll help you make some better decisions about your trades, or at least give you insight into what I'm doing from an educational standpoint. And thanks as always for joining me for our session. And I will see you all on Monday, it is, right? On Monday. So take care.